Good afternoon, everybody. Hope we're well, happily ensconced in our own homes and looking after our health. I just wanted to take today to run through a little bit of a presentation that I've prepared for you. But the vast majority and the theme of this presentation is that there could just be the beginnings of things starting to becoming a little bit better. Now, it comes as a great relief for me to say that because we've just been delivering bad news. And what I wanted to do today was to try and find something a little bit more positive that we could hang our hats on. And it's in these times of extreme difficulty that can be problematic. But I have gone through and analysed some of the information and data that's available, and I think some of the outcomes are quite interesting. So I will share them with you. And as I said, I don't want to be giving anybody any false hope, but I do think that we are sort of coming to a point where this week we could be looking at a little bit of a turning point. So I just wanted to explain that to you. I'll just do my usual sort of bit of a share screen thing with you. I've actually titled this, "The Worst Might Be Getting a Little Bit Better," with some signs of improvement. Obviously down here, you can see that we've got our standard disclaimer that says that this is information of a general nature only, and you should seek advice if you're going to act on it. So let's just have a quick look at how this sort of pans out. So look, in the words of Winston Churchill, now this is not the end. It's even the beginning of the end, but it is perhaps the end of the beginning. And that's a rather unique way for the great leader to explain what was happening in the early days of the Second World War. What we are seeing, and I'll just take you through some of these charts that we've actually had a bit of a look at before. But first of all, the Australian share market. You know, we know that the coronavirus hit us pretty hard. We've got this major correction in here, which drove the market down 30%. But since then, we've seen a sort of a change in direction where the market has shown some sort of signs of recovering. And that's to be expected a little bit because the market does tend to work 6 to 8 months ahead of itself. So it actually factored in all of the bad news to begin with, which was this significant fall, and is now starting to see, well, on the other side, there is an argument to suggest that we're going to come through this. And so that's starting to be factored into the market here. So we get this kind of sharp V. Now, I'm not suggesting this is the end of market volatility, and I'm not suggesting the market hasn't got further to go down, but it's encouraging that the actual bounce off the floor has been sustained. If we compare that to the US market, we get the same kind of 6-month performance and then straight down off the edge of the cliff, and now this bit of a rebound. So it's not atypical to sort of suggest that we would be following the US market. That often occurs. But interestingly enough, when we look at the Australian dollar, which is shown in this chart, it's actually tracking this market as well. So the exchange rate is actually lining up with the two share markets. So here the Australian share market, fall, small correction, US, fall, small correction, Australian dollar, fall, small correction. I don't think there's anything that suggests that this is a coincidence, that these markets are moving in unison with each other, and we're sort of taking our lead from the US. And I think that, as I said last week, and I do still believe that the US have got some bad news to come, but our news is looking a little bit brighter. These show the levels of the blue line show the levels of new cases that are being found in Australia each day. And then this is the curve that they talk about in the news bulletins all the time that they're trying to flatten. And you can see there's the early signs up here that this curve is starting to flatten out, which is very, very positive. And again, I don't think this is necessarily long-term sustainable, but I do think that there are good signs that we're starting to see. That is, I'm not suggesting that coronavirus disappears. What I am suggesting is that we're starting to control it. So a lot of that control has come from the various social restrictions that have been placed upon us. So if you look back to the beginning of this, where in January, we started by initially blocking arrivals from China, and then it went through to blocking arrivals from Iran and then Korea and then Italy. As we started to get an increase in the number of cases, these cases obviously being imported cases. When we got to the top here, when we got to a sort of a peak here of 450 or 500, 450 cases a day, the government started to introduce this range of social restrictions, which included things like limiting outdoor gatherings initially to 500, and then reducing that down to 100 and then 2. We've seen closure of pubs and clubs, ban on overseas travel. So all of these things have as they were introduced, have started to have an impact, which has led us to fall down this other side, which has seen a reduction in the amount of new virus contracted. Now, when we compare that to the US are actually behind us in these states. They haven't introduced these restrictions in any way, shape or form in a timely manner. So their numbers of new cases being confirmed is actually really dramatically rising, as unfortunately so is their death rate. Now, if we look at where we sort of introduce these things and the lag time to where we sort of to see, so reduction in international travel and outdoor gatherings, it took us quite a while, probably best part of 2 weeks to get that outcome. So it looks like the US, if they are able to introduce these things, will start to get that slowdown. I just want to revisit the largest pandemic the world's ever seen is the Spanish flu pandemic, where 27% of the world's population contracted the influenza virus. Now, in 1918, it was around about 500 million people, because there are obviously a lot less people living on the planet. So the death toll was around about 40 to 50 million people. And so, in some estimates that they were even higher than that, because there are a lot of sort of regions that didn't report. So the death toll from the Spanish flu was somewhere between 2.2% and 5.4% of the world's population. Now, what I also wanted to do, just contrasting that with regards to what's going on with what happened in 1918 to 20 with Spanish flu, is to have a look at a Price Waterhouse study. Price Waterhouse have just completed, last couple of days actually, a significant report which looks at the economic impact of COVID-19 on the Australian and on the global economy. And it does some modelling about what the future might look like. And I think they're pretty much on the ball. I think they're pretty accurate with what they're suggesting. What they are saying is that there's going to be a significant reduction in the amount of labour that's going to be available to the marketplace. So they've assumed that 50% of the population contract COVID-19 and that 61% of those people are in the workforce, some of them obviously being retired and some of them being young. And they're going to be absent from work for about 5% of the year, which represents around about 2.5% weeks off. So that's going to represent around a 1.25 to 5% reduction in the global labour supply. So that's the first significant impact they highlight. Now, they say, what's the flow-on impact to that to GDP, gross national product, which is our way of measuring economic growth effectively, or how healthy an economy is. So they're suggesting that over the year, the pandemic could reduce GDP in Australia by $34.2 billion. And so if you look at that sort of comparatively, that says that they've estimated the pandemic-related contraction of 1.32%. Now, in the global financial crisis in 2008, GDP declined by 5.2%. So pretty much 4 times as a significant impact as what PricewaterhouseCoopers are suggesting is going to be the case with the current pandemic. Now, the impact to the government's budget will be that they're suggesting that tax revenue will obviously fall. And they're saying there's going to be an increased expenditure in the stimulus package. They're suggesting then that the current government projected surplus of $6.1 billion will actually turn into a deficit of $24.8 billion. Now that's a $30 billion swing. Now, for comparison, if you go back to the global financial crisis, the actual amount of deficit that we actually accumulated was $27 billion in 2008-9, then a further $54 billion in 2009-10, meaning that the total for the GFC was around about sort of nearly $80 billion, whereas our impact here is going to be more like $30 billion. Interesting to see that their forecasts are that it's not going to be as bad as 2008. So what about the markets? Is it possible that the markets have got this to some degree wrong? If you look at, this shows you the actual fall in the share market prices compared to the GFC in the mustard colour the COVID-19 in the blue colour. And you can see here that the share market declines in pretty much each of these jurisdictions is much higher than it was during the GFC. And that was after following the 4 weeks following the fall of Lehman Brothers. Now, that sort of again tells me that it's possible that, you know, the COVID crash could be just a little bit overcooked because it wasn't this severe at, you know, the worst part of the point of time of the GFC. So interesting again. So when we also then look at what the relief packages that have been actually pumped into the economy to overcome this, we can see that the governments have actually put in more money, probably with the exception of China, but each of the other current countries have actually pumped more stimulus into their economies, much more than they did during the GFC. So that's obviously going to pour out in the way of a positive outcome at the end of it. So look, some of the conclusions are that the world markets have really and truly factored in a worst case scenario. And there is a potential that there is some realization that that's the case now. Government fiscal policy response has been fast, it's been really targeted, but it's been way over what we've seen in the past. And it may be that that government stimulus actually will really sort of keep the economy, keep the home lights burning. Still, the worst is yet to come in the US. We kind of looked at that chart and we know that's certainly going to be the case. And when we look across the share markets, we're starting to see emerging winners and losers. You know, winners in areas like health and pharmaceuticals, obviously, they're obviously going to benefit from people being sick. Logistics are, you know, we're still having to move things, you know, from point A to point B. There's still food that needs to be distributed. There's still medicines that need to go out, etc. Obviously, home entertainment, we're spending a lot of time at home, which is helping companies like Disney, Amazon, Netflix. Communications, obviously, we're doing a lot more communication by these kind of methods, which is helping telecommunications company and obviously agriculture. And then the losers are, you know, we're obviously not shopping like we were. That's obviously being hurt. Gaming and liquor services are obviously severely impacted, as are airlines, toll roads. There's nobody driving their cars. And media, there's a lack of advertising, and not even to forget sports, where we're seeing some, you know, seeing obviously no footy. So that's also being impacted. So just going back again to a final quote for Churchill, if I can, it's a mistake to try to look too far ahead, because the chain of destiny can only be grasped one link at a time. So I don't want to get too far in front of ourselves here, but what I am suggesting to you is that we're starting to see some signs and some evidence that we're moving into a position that is a little bit more understandable. It doesn't mean there's not going to be more volatility. It doesn't mean there's not going to be some more downside. But what it does mean is that whereas when this hit us a month ago, it was all questions. There was just no answers. It was just questions. Now we're starting to get some logic flowing through to a point where we can start to see some answers to some of those questions. I hope this has been helpful for you. I'm trying to bring a little bit of positiveness back to us. We haven't had a lot of it. It's a very, very difficult time to not be seeing family and friends, and to be concerned about those that are vulnerable to this particular disease. But please stick to the government guidelines, do the right thing. It's working. I'm showing you on these charts that it's working. If we can do that, it means that there's probably less time that's required for this kind of isolation. Do take care. Do drop me a line, an email, jump onto the Facebook page. But by all means, stay in touch, and we will keep staying in touch by giving you this kind of communication on a regular basis as we possibly can. Thanks for listening. Talk to you soon. Bye.